Next, so a bullish harami. So these are double stick patterns, and here we'll cover sort of engulfing candles and when we're looking at two candles and how they react with each other. So a bullish harami candle is a long red candle followed by a smaller green candle. The entire green candle sits inside the previous red candle, so something like this, unfolds over 2 or more days, indicates a selling momentum is slowing down and might come to an end. So this doesn't necessarily tell us that there's going to be a trend reversal, but it's giving us the idea that if there was a lot of, it opened here, it closed here, there was a bunch of sell pressure, and then the next day we only see trades happening within the body of the previous, it's basically telling us that, well, hey, this is giving us the idea that right now the majority of the price action is somewhere in this section, and then that gives us it tells us that the bears are no longer selling as much, and they might have turned into bulls, or the bulls have come in and said, hey, we're going to start snatching these at really low prices because this is a great price to start buying. And so that pushes against the sell pressure, meaning there are no more bears that are wanting to sell or short the stock for that matter. And now we're looking for the bulls are coming in and saying, hey, we're trying to snatch this up at a great price, and therefore they're sort of stopping that selling momentum that the bears have sort of produced. And so it's very similar to, or what I would consider similar to an engulfing pattern, but reversed in some regards, where it's a small candle, it's a small green candle that would technically fit inside a bullish harami pattern. On the upside, you have a bullish engulfing candle, which just like it sounds, it's an engulfing green candle that sort of essentially erased all the patterns or all the action that was done on the previous day by the red candle. So forms when a small red candle is followed by the next day by a larger green candle. Body of the green candle completely engulfs the candle of the previous day, signifies trend reversals when preceding candles are four or more red candles. So you could also look at this in a larger pattern when there's a lot of, so for example, this would be an engulfing candle, right? So we had a red candle, all this action happened, it started up here, it sold down here, and then immediately the next day, anything that happened here was essentially completely nullified, and we have a new price up here, and so on and so forth, right? You could maybe say this is a bullish harami, but followed by a couple days, you have to look at how that pattern plays out. So you might see the bullish harami here. You might say, okay, well, it's trading within that pattern. It looks good. The next couple days, they look kind of red, but then it sort of tailors off and then goes back up again, and then some similar pattern, but it's already telling us that there's sort of a decrease in that momentum. So this doesn't necessarily, the bullish harami candle doesn't necessarily tell us that there is a trend reversal. Instead, it's giving us this information that there is slowing of the momentum. Whereas a bullish candle might serve to tell us more of a trend reversal rather than a complete slowdown altogether, right? So it's indicative that you think about these patterns are as actions that people are taking and identifying what they are to give us a better or give you a better idea as to what's going to be happening next, right? So a harami is telling us there's a slowing of momentum, whereas a bullish gives us more of a trend reversal esque. Specifically, if it's been following by a couple days of sort of reddish candles or negative candles, if there's a large engulfing candle, then that usually signifies quite a big of a trend reversal. Let's go back to the slideshow. Oh, okay. Up next, we have the bearish harami candle. So same idea. Bearish harami is a long green candle followed by a small red with a body entirely contained within the body of the previous, unfolds over 2 or more days, appears at the end of a trend, may indicate buying pressure is decreasing. So same idea. You have a couple of green candles coming, and then there seems to be a slowdown of pressure of buying pressure, and then it sort of gets engulfed a little bit. Doesn't get engulfed, but it's trading in this area, and it then continues to tailor off. So what does this tell us? There's a lot of sell pressure, or sorry, buy pressure, and then bears jumped in. There's a lot of sell pressure now, or a bit of sell pressure. They're not really sure. And then the next couple of days, we just start to see that there's a price decrease. And then that gives us the idea that this was more of a bearish harami. So when you're looking at these patterns, you don't, like I said earlier, you don't want to look at them on a single day. You want to see how they play out over the next couple of days, especially if it's something like a double pattern where you're looking at more than 2 days of a candle. Bearish engulfing, same thing. A bearish engulfing pattern can occur anywhere, but it's more significant if it occurs after a price advance. This could be an uptrend or a pullback to the upside with a larger downtrend. So go a bullish candle right here, then we got a bearish engulfing. Bearish candle opens at or above the previous candle close. The length of the bearish candle engulfs the previous green candle. The bearish candle closes below the previous. So a clear example of a bearish candle that's engulfing. So whatever green price action the day prior, a bearish engulfing just completely nullify whatever action that happened during that day and makes it lower.